In order to demonstrate the usefulness of specific ICT concepts in cryptocurrency trading, I am freely sharing my own trading model to inspire both beginners and experienced traders. The model is not limited to ICT students. Both novice and seasoned traders can use it. The main guideline is to trade on timeframes of 15 minutes or more, because trading below this limit might result in bad choices, erratic setups, and account blowouts. In order to keep this content coming, I warmly invite all my video viewers to subscribe to the channel because I believe in the free exchange of knowledge. One critical level you need to pay attention to in this model is the midpoint of the range, the 0.5 level. When the price reaches this level, you should break even on your trade. You can take a small partial profit if you want, but I strongly suggest simply locking in break even here to secure your position. From that point, your main target becomes the opposite side of the range, either the range low or range high, depending on your trade direction. That's the entire essence of this crypto strategy. I'm not exaggerating when I say it's incredibly effective. This approach is simple, powerful, and highly profitable when applied consistently. Now let's flip the scenario. Imagine the chart is in a downtrend, and we experience a sharp dump in price. This marks the formation of a range low. Eventually, price recovers and forms a significant high. This high becomes important if it holds the price down for some time or is followed by consolidation in that region. Then, if the price breaks below the previously defined range low and quickly re-enters the range, we begin looking for a market structure shift, but only after the price returns inside the range. This is important. You cannot enter based solely on a market structure shift that occurs outside the range. For it to be a valid range trade, price must re-enter the range first before you take your trade setup. To improve your win rate in trading, enter from a fair value gap, order block, or breaker block, targeting range highs. Avoid trades on Sundays and Mondays, and skip Saturdays if possible, to avoid erratic price action. Now let's look at an example to bring all of this together. We'll use Sol/USDT on the 15-minute chart. In this chart, we had a strong upward push. Before that, there was a clearly defined range high and range low. After price swept the liquidity above the range high, a deviation, it invalidated that range by taking out multiple highs. Once that range played out, a new one formed. Here's how. Asterisk, a new range high was created. Asterisk price made a few lows, but each of them was quickly violated, so they weren't significant. Asterisk eventually, price formed a low that held, followed by a strong push upward, much stronger than previous attempts. That confirmed our significant range low. Then, price returned to sweep the range high, giving us a deviation. The last low before the sweep is what caused the deviation, so we use that as our market structure reference point. When price broke below that low, we had our market structure shift. At this point, there was a fair value gap and a large order block nearby. I would have entered from the fair value gap, set my stop just above the highs, and targeted the range low. That's all you need. Truly, this is one of the most efficient and profitable trading models in crypto. It keeps you disciplined, prevents overtrading, and uses key structural concepts to give you precision entries. I'll show you a few more examples to reinforce this, and then we'll wrap up the video. Let's move on to example number 2. In this scenario, we saw a strong push to the upside, which was followed by the formation of a significant high. Soon after, the market began to pull back. Although there was an initial low formed during the pullback, it wasn't significant because it was violated almost immediately. However, price eventually created another low, and this time, we saw a strong move upward from that point. That upward move gave validity to the low, indicating that stop losses are likely resting below it and that the market respects this level as support. With that, we now have our range high and range low clearly defined. Now, as price pushes up again, We mark out the significant high, which is the one that caused the pullback leading to our range low. This height becomes important in our setup. Next, we observe a deviation. In this case, price swept above the range high, which is a classic liquidity grab. For me to consider a market structure shift, I look at the last low before the deviation. That low is what caused the sweep, so it's our point of reference. When the price breaks below that low, it confirms the market structure shift. On this specific chart, which is the BTC/USDT pair on the 4-hour time frame, you'll notice a candle that sweeps liquidity, giving us a clean order block. That area becomes our entry zone. I'd place my stop just above the high and aim for a target at the opposite side of the range, which offers a 2.9 risk-to-reward ratio. That's a highly efficient setup. If you've been following me for a while, this might remind you of the ABC strategy I've talked about in the past. And yes, the concepts are similar, but this model includes more refined tools like order blocks, fair value gaps, and deviation logic to turn it into a high-probability crypto trading model. Let me show you one more example, and this one is very clean. We're looking at ADA/USDT on the 4-hour time frame. The market made a strong upward push, followed by the formation of a significant high after a meaningful pullback. This gave us a high strong value. Then we observed that a specific low held well. Price bounced from it with conviction, so that became our range low. Eventually, price swept the range high, triggering a deviation. As always, we identified the low that caused the deviation, and once the price broke below that low, we had our market structure shift. Right around this level, there was a fair value gap, providing a textbook short entry zone. I'd place my stop just above the range high, and again, we'd be targeting the range low. You can see clearly how price moved after the sweep. This is a textbook example of how the strategy plays out. Honestly, this model is so simple and effective, it can easily become your bread and butter strategy for trading crypto. I really encourage you to backtest and forward test it. And once you see it working, tag me and let me know. I love hearing your success stories. All I ask in return is a simple subscription to the channel. That's it. I'll be back with more solid setups in the next video. Until then, happy trading and goodbye.